Risk appetite around the world remains strong. So are market bears poorly timed right now, or are investors simply oblivious to warning signs? With us today is Jim Wyckoff. He's the market analyst and columnist for Kitco.com. Jim, welcome back.
Hi, Danielle. Always nice to be with you.
So, Jim, nice to be with you too. And I took a cue from one of your recent commentaries where you said that risk appetite in the world marketplace remains upbeat. Is there really no cause for concern for investors? Is there anything that keeps you up at night, Jim?
Daniela, if you would have asked me this question 48 hours ago, I would have said, the investor appetite is really upbeat. There's really not much in the way to stop world stock indexes from trending sideways to higher. However, on Tuesday afternoon, or actually on Wednesday afternoon, the Federal Reserve came out with their FOMC statement and really surprised the marketplace with a more dovish tone on their monetary policy. That spiked the dollar index lower. It put a scare into the U.S. stock indexes. As we speak, Wednesday prices have rallied a little bit, or Thursday the prices have rallied a little bit. But there is some new worry in the marketplace about slowing world economies led by the U.S., which the Federal Reserve said the economy is slowing down a bit.
Well, some analysts say that US-China trade deal would be bullish for the metals. Do you agree with that thought process? And how close do you think we are to a deal?
Danielle, I do agree that it would be bullish for the metals because China's economy is the second largest in the world. China is the major metals importer in the world, and if China's economy gets healthier, then that's going to mean more demand from consumers. So, however, we really don't know the status of the completion of the U.S.-China trade talks. One day we hear they're going well. The next day we hear that President Trump wants to leave tariffs on for a period of time. So we really don't know. I think in the next couple of weeks, this is going to be fleshed out, though, and we'll know for certain.
All right. And looking at equities, Jim, do you think valuations are still overstretched? Risk appetite was still high in 2007. So are we seeing a similar pattern today?
Daniela, I would not say so. We backed the world stock indexes, generally speaking, down from the autumn highs. They're recovering, but I wouldn't say that world stock indexes are overstretched.
All right. Finally, Jim, lots of good momentum here in the precious metal space. We're seeing palladium on fire, obviously gold having a good run here. Is there one standout star for you, one to watch?
Well, palladium sure looks strong. The technicals are strong. We've got new record highs. We've got no technical signals in the palladium market that market's near a top. So I think the price is going to continue to trend higher there. Also, the gold market, the technicals have turned stronger just recently. So I think the path of least resistance for the gold market is also sideways to higher.
Jim, just to extend on palladium there a second, I had one guest tell me $2,000 palladium wouldn't be out of the question for him.
When the market goes parabolic, like palladium has, it's a gunslinger's market, and you can't rule out anything.
Wow. All right. One to watch. Jim Wyckoff, thank you so much.
Daniela, also, if
yes.
you could give me a second here, I'm going to be starting a new series of educational features on Kitco. So for you metals market watchers out there who also like to do a little bit of trading, not only in the metals, but in other markets, keep your eye out for my new educational series coming out to help traders become more successful.
Jim, I'm happy you brought that up. We love seeing more Jim Wyckoff on Kitco.com, and you're an excellent educator. You've taught me so much, and I think our viewers will really value this. So thank you.
You bet.
And thanks for watching. We'll be back tomorrow.